What's up, y'all? My name is Karina Cook. I am a tax and financial strategist. I'm a CEO, a businesswoman, a faith-led businesswoman at that. Welcome to Evolving Out Loud, guys, where in this podcast, we talk about business, money, mindset, finance, and everything else in between, including entrepreneurship. My name is Karina. I am your host. I am a tax and financial strategist, and I love that we get to dive deep into what it takes to grow, to lead, and to build meaningful impact as you're doing so. It doesn't matter if you are trying to scale your business and your finance, learn where you are financially and get yourself straightened out, or really just trying to find a pivot area where you can actually find a voice as a leader. We are going to be here doing it together in this place, evolving out loud. So let's get into it. Y'all, evolving out loud. This episode is important to me because I wouldn't be who I am if I didn't talk about taxes, y'all. I want to talk about taxes in this video because I think it's important to know what some things is that you can do when you're an entrepreneur in the beginning level, and talk about how that it could be in beginning or it can be mid. To believe it or not, some really profitable businesses are making a lot of money and losing it to taxes, and they don't have a lot of strategies put in place. So you are not alone. If you start early, then again, I'm always going to talk about foundation. Starting early with a great foundation allows you to do the things you want to do later on without it being so scary or a lot to handle. One thing I want to let you know in this episode is slow and steady wins the race. Okay, slow and steady. If you're in the beginning, middle, or you're making tons of money, this can help you at any level that you're at, especially if you have not put strategies in place. So strategies it's for entrepreneurs who are growing, right? You're growing, you're trying to find a way, you're trying to find methods that work for you. You could be making money, but it doesn't matter if you're losing it and paying it all to the IRS. And that's just the fact. We don't want to pay all the money that we earn to the IRS. I mean, what's the point of that? So in this video, that's what I want to highlight and talk about. One of the things I say is like, you could be scaling and making a lot of money, and then you look at your tax bill and you're like, hold up, what is this? And it's a common thing, but let me tell you, it's avoidable. It's avoidable. And let me tell you why it's avoidable. Because of knowledge, because of what you know. You might not know how to actually implement the actual strategies or anything. But once you start knowing that there is something out there that you could take advantage of in your situation, then the power is in the knowing and more so in the doing, right? Because you have to know first before you even do. So it doesn't matter at what stage you're in. Once you learn strategy, y'all, that is the game changer. And this is going to be the right place for you to learn some of those strategies. So let's get into it. What I want to talk about is what entrepreneurs don't know that's costing them. And let me tell you, what you don't know is costing you, right? And it's not just with the IRS, okay? This could be costing you with your time, with your money, with your head, with your stress, everything. You could be fearful of what you don't know. You could be fearful of the outcome that could potentially happen. And you know what's crazy is a lot of people are afraid to move forward with taxes because of what they don't know and maybe how they've handled things in the past, or they're not up to date and caught up with things. So they're literally standing still and not making any movement. But let me tell you why that can hurt you more. Is because you're losing out not just with the IRS, but time, money. When you wait to file your taxes or to do tax strategy, let me tell you the pain that it will cause. One, you're going to lose out on a lot of money. It's not just with the IRS. Now you have to pay a bookkeeper to clean up the mess that has already been there. And it's harder to go back, and it's harder to untangle things. So obviously, there's going to be a cost to do that. And the cost will cost you a lot to unravel it, depending on where you are in the journey of not handling your business with the IRS. And we see it with a lot of celebrities. Heck, I've seen it time and time again with me having to work through with individuals and businesses to get past a certain point with the IRS and work with partners to help them go through that. Now you might have to get represented, which is also costly. Represented is, when you go to a enroll agent and you ask them to represent you to handle your matters with the IRS. And when you handle those matters with the IRS, technically you don't have to be the one talking to them. I like to look at it like you have a lawyer for your taxes. They do handle the documents, they talk to them and find strategies to get you a lower tax bill or just help you in a way that isn't as worse for you as it was. It helps you to kind of get your bearings and say, okay, this is my position, but can I negotiate with the IRS? And so I think that is a very important thing to note, is that you still have to pay that. And also it costs you to go pay for taxes. Now, listen, it's more to pay for taxes that were in prior years, because tax professionals, we charge to go back to another year because now we have to go do more research for that year. We have to go do a whole lot of other things. We're not even going to talk about doing your tax return over. So that is a lot of money. And I did not even talk about the cost to you to pay the IRS. If you think about just that area alone, that's enough, right? If you care about money, it's more in that area. Now we talk about time. The time that it takes to get these things done is, clients want these things done fast. And I'm like, this is the process and you have to go through the process. There's a lot of back and forth with the IRS. There's a lot of back and forth with the professional, with trying to get things understood with the taxes and where you were then versus where you are now, and coming up with a solid game plan. And y'all, that takes time. The uncertainty also of not knowing. So all these things are like something that is just like, okay, you can avoid that. It's very avoidable. You just have to get past the fear. And how do you get past the fear is educating yourself and knowing, okay? The thing is, you can outsource strategy. You can outsource these things, right? But as a CEO, your role as a CEO or entrepreneur stepping into CEO mode is this part, is strategy. But I would always say outsource the tax strategy and outsource the taxes to a professional. That is part of your role, is how can I plan ahead and get these people involved to help me become a better CEO, to help me see the vision for my company, to help the company make money. So you're always forward thinking and you're always thinking about your business and how you can help it grow and how you can get people implemented into the business to become a business that grows. That is like one of the things that I stress out the most, because the side effects of having no tax plan, y'all, it is crazy out here in these streets. When I tell you left to right, you're going to be overpaying when it's unnecessary. You're going to have so much fear creeping in, watching over your back, thinking the IRS is going to come, thinking you're going to get levies and letters in the mail, and not being able to forecast, right? Look in the future and forecast how that's going to be, how much money you're going to do. It puts you in a stressful position to worry about your cash. That is one of those things that it's better to handle now than later, because putting it off becomes a more bigger problem. Okay. And keep in mind, y'all, tax planning is not just for the bigger businesses. It's not just for wealthy people. Sure, there is a level of strategy that you can take. One of the things that I feel happens is people see Trump, right? They go, he is the poster boy for tax strategy. He is literally one of the most tax savviest people out there. And he creates these ways and these methods, especially through real estate, to make sure that he's leveraging the tax law. This is all stuff that they put out there for us to do. He's just playing the game. But back to what I'm talking about is when you start to think about tax planning, some of the strategy you will take will be very different in the beginning of your entrepreneur journey. If you don't really have a big tax bill, or you don't really have the means or the capacity to go invest in real estate right now, I would not tell you to do that. That is a more advanced tax strategy. So you can always strategize if you owe taxes. It just has to make sense. And you have to do it in a way that the strategy that you're doing is not over leveraging the cash that you have. What do you mean when you say that, Karina? I'm not going to tell you to go get an S corporation if you are under 40K in profit. Why wouldn't I do this? I'm not going to tell you to get a corporation yet to do this, because you have to take a reasonable salary. You have to consider the tax return that it takes to process a corporation. Once you start to elevate into a corporation, the tax returns are separate, right? You have your personal, now you have a business tax return, because you are no longer the one person. You are two different. You're an entity and you're a person. So the entity tax return is way more expensive. And not only that, you also have operation costs. You have payroll fees. You have the payroll taxes and all these other things. And the amount of money it takes to run a corporation is so different. So if the fees does not justify the savings, then I would not recommend that for anyone in the beginning. I would probably recommend you look at the low-hanging fruit that you have now. But as long as you have consistent income, you do not have to be a wealthy or a big business to actually leverage the tax code and leverage tax strategy. So if you have, for example, I had a client who they saved about roughly $15,000 using the Augusta Rule. And now the Augusta Rule, that one works even if you're not a seven-figure business, if you're not making a seven-figure brand income, because the way you're able to leverage that, and I'll talk about the Augusta Rule a little bit, but that is a really good strategy to use at any income level. I think to leverage your deductions and your credits is also good. And what happens is entrepreneurs, I think what happens is I've seen coming into business is that entrepreneurs, when they start making money, they get surprised. They get surprised about, wow, I have a lot of money coming in, but I also have a lot of taxes to pay. And now what do I do? What do I do? I don't know anything about taxes. I don't know the difference between the tax person and the CPA, and what is the difference between tax prep and tax strategy. Coming in the beginning, I can see it being very overwhelming. The part that happens is people come in, they make money, and then they go, okay, I'm going to go outsource or do whatever. Cannot sustain doing my own taxes anymore. They go to a tax professional, which probably could be, usually is a tax preparer, okay, or a CPA. And by the time they get to me, this is what I hear. Hey, I've been working with my tax professional or my CPA, and they have been preparing my taxes and getting my stuff done. But around tax season, I just get hey, here's the bill. And now I'm stuck with a tax bill. Or they don't talk to me throughout the year. Or I don't know any strategies. I wish I would have known that. The list can go on and on. And I'm like, dang it, They're like, this person was supposed to do that. And I go, I'm sorry. Listen, there's a difference between a tax strategist and a CPA. Not all CPAs do tax strategy. And some CPAs can focus heavily on auditing, or they can focus on bookkeeping. They can focus on tax preparation. Now, if you get a CPA who really likes looking at tax law and strategy and really getting deep into actually helping their clients in this area, some CPAs, not all, will focus on tax strategy also. You have a CPA who just prepares tax returns, who says, I'm just doing the taxes for you to help you stay compliant. And Staying compliant allows you to report your income to the IRS and let them know if you're going to pay or if they need to give you money back. That's simply what they do. Okay. And so you'll notice also the fee that they charge to do this does not justify a tax strategy. Because if you're going to somebody who is saving you tens of thousands of dollars, the bill to save you for that amount, the value there may be a little higher than what you've been charged for tax prep. And if it's not, I would probably start looking at what kind of person you're working with if that is the case. And I think the simplest shift for most clients to help save tax strategy and save clients when it comes to saving thousands of dollars in taxes is simply within just knowing that. So they can now start saying, moving forward, I'm going to start strategizing. And at that point, that's where I get my clients coming in. They're like, I've had it to my wit end. I am ready to start tax planning. And I think it's risky to think about tax planning is I'm going to focus on this later thing. It's literally not, y'all. Like, this is something that you want to focus on as soon as you have that opportunity to. And so when I say focus on it as soon as you have the opportunity, that looks like I'm going to now get myself educated and start brushing up on like the need to know about certain things. I'm just telling you to brush yourself up with what you need to know in order to make a move. So if we're talking about retirement, if we're talking about things that give you a deduction, those are things that should be practiced even before you start getting to the advanced things or major strategy, because it helps. And let me tell you guys, those who have kids, let me tell you why it helps. Because the sooner you start, the sooner you can start getting your kids involved. Hey, they might not want to take your company. They might not want to get past that business to run it, but they may want to be invested into their own thing. And they may want to do anything in life, right? That requires them to earn income. And if they earn income, they have to pay taxes. But, that is what I would say. When you're paying taxes, the thing is, you're either going to pay a little bit or none. Some people think, oh, I'm not going to pay anything. Yeah, it really also depends on the strategies. Some of my clients are happily like, hey, if I don't pay, I'm all the way happy. But if I'm paying $80,000, sure, I will pay $30,000 instead. That's a no-brainer, right? And, what I would say to someone who is making at least $10K a month with no strategy in place, I would say that you should start at least hiring or at least consulting with a strategist to say, hey, what should I be aware of? Even if you don't go knee deep into tax planning, it's good to at least go through advisory so that maybe you can meet quarterly or you can get educated and you can start building a rapport to say, okay, now I'm creating a muscle for this. And now I'm fully aware of the process and what needs to happen. So I'm comfortable with moving on with this because I'm going to go from 10K to 20K to 50K. And at that point, you're going to need strategy, especially if you're netting a certain amount of income with your business. I mean, at this point, you're just happily giving away taxes. There's different type of ways you can do it, right? You have deductions and you have credits. And I think some people get that. They get confused on like, what's the difference between these things? Well, when we have deductions, we talk about, okay, this is going to subtract from your income. Okay. This is something that, like, if you're in a higher tax bracket, let's say that you're in the 35% tax bracket. Well, heck yes, if I get you to the 24% tax bracket, that's amazing. But I think what people get misconstrued with the deduction is that you think that, okay, if I donate $100,000 to charity, then I get that whole deduction. No, it doesn't work that way. The thing that I love with charitable givers is that they give because it's usually about the giving part, and then they reap the benefits of the giving because it's just a gift that they have, and they reap the benefits of just also getting a tax deduction. Now, when you're a charitable giver or you're giving to charity and a nonprofit, a 501c3, then you're not going to get that whole $100,000. The good thing is, you'll get a portion of it, right? So let's say you'll get $60,000 of that deduction instead of the whole 100. That's still better than nothing because it could potentially bring your deduction low enough to get you into another tax bracket. And so that's always the goal. Another thing with the deduction, the difference between deductions and credits, the credits, for example, if you have a credit, you'll get $1 for dollar. Okay. Having $1 for dollar, having a credit is great. There's not always a lot of credits versus the deductions, but if you can qualify for a credit, you get that $1 for dollar. So example being, you owe $5,000 in taxes, but you have a tax credit of $6,000. The first $5,000 takes care of the bill that you owe, but then you have that $1,000 left. That $1,000 tax credit you get as a refund. You get the money back. Now, deductions work a little differently. When we talk about deductions, same scenario, you owe $5,000, but you have a $6,000 deduction. That first $5,000 is going to wipe out your bill. Now you owe $0. What do you do with that other $1,000? The IRS is like, we're not giving you this extra $1,000. Sorry. We're not doing it. So that extra $1,000 will be carried either forward or you just don't take that, right? And usually it's carried forward to another year where you're able to use it depending on the deduction. So that is the difference between the two. Now, some of the things that I feel like when you're going into business, some people want to go heavy into things. And when I say ease your way is because it's all in your tolerance and your discipline. You can do a lot of different things, but when you start to build a foundation of the simple things, because I can tell you to do 10 tax strategies in 1 year, are you going to do it? I could tell you to do 2 or 3. I can give you a risk tolerance to strategy and it worked for you. One of the best strategies you can take, I love the Augusta Rule. The Augusta Rule is perfect for those people who are homeowners. You are leveraging your home and the IRS will allow you to leverage your home and rent to your business. So let's think about this. I'm a person, I have a home, and I'm renting my space out to my business. My business is a whole separate entity, okay? And there's some documentation that record keeping that should be happening as you are developing this strategy and moving the strategy forward. This is a strategy that should be implemented way beforehand so that we can have the proper records, that we can do all the things that we need to do, prepare beforehand. So think about a vacation. Usually, except for those who are very spontaneous, people who take vacations, they are planning it, right? They want to have it at least a month or 2 or 3 or 4, maybe even a year ahead of time. So when we're thinking about some of these other strategies, it does require some planning ahead. And so with the Augusta Rule, I love it because you can rent your home out to your business for up to 14 days. And listen, y'all, let me tell you why this is powerful. This is powerful because you get to rent this out tax-free. Yes, tax-free, okay? The thing is, when you're renting this out, I can receive, if I rent this out to my business, let's say I rent out my business for up to 14 days a year. Let's say I did it five times in 1 year. I will get this deduction. So as my business sends me the money, I get the income, okay? I don't have to claim this income on my personal tax return, but the business actually gets this as a deduction. That is amazing. There's history behind it of why this strategy really works. And I'm not going to get in the weeds of that today, but I think it's important because it's a strategy that you can leverage. And another thing that I love is, why would I do the Augusta Rule? What would make me qualify or say something to one of my clients about doing it? Well, listen, one of the things I talk about the most is getting a team, okay? Having a board, setting board meetings. When you become a corporation anyway, you should be leveraging having a team. Why? Because a team allows you to grow. And so as you're developing your team, then you can have board meetings at your home instead of at a hotel or an event space. You can look at the comps in the area for the event space or the hotel and see how much it actually costs to rent that space, and then compete with that or go in between those areas and take the deduction for that. And so why not have a board meeting at my house? Is it more comfortable? Like, what is the reason why I'm having the board meeting there? What are we doing there? And y'all, it has to be to really do business. And this is really important to know, because when you start to step in CEO mode, we're leveraging, we're forecasting, we're future thinking, we're building up our companies. So these meetings should be appropriate in order to do those things for your company. It should be necessary. And so that is a part of it, is making it ordinary and necessary for your business in the pursuit of income. And that is in code 162A, and it allows you to do that in pursuit of income to do these things, right? Doesn't mean that it's ordinary and necessary in your business. Maybe everybody doesn't do that in your industry, but this is what you're doing to pursue more income, or to leverage having a employee appreciation day or whatever it may be, right? These are things that are important for us. So that is one of the things I wanted to make sure I talked to y'all about. And then, I think that once you get a hang of what that process is and how I should go about it and when I should go about it and all these things, and you let go the fear of what the IRS feels like, then you'll be better off, and you'll be able to say, look, I'm going to put this aside for me. I'm going to tuck this away, and I'm going to work towards doing what I need to do to save money in taxes. Taxes is one of those things that, listen, y'all, I say this a lot. Thank you to the great Benjamin Franklin. Y'all going to hear me misquote a lot in these videos. Benjamin Franklin said, one thing's for certain, death and taxes. And that's important to know. So why not learn it, right? Why not understand what your options are? I think it's crazy because there is, at least the way we get taxed on our stuff, y'all, is insane. So what I tell people is, you can't control what you pay in taxes. Let me tell you why. You have, let's say we just break it down. You have a dollar, right? You have a dollar. Almost 51% of that dollar is controlled by taxes. We get taxed on income, which is money coming in when we earn it. We get taxed on sales tax. That's money going out when we spend it, when we're purchasing things in the stores and the grocery stores, when we're buying products and services, all these things, right? We get taxed on property tax. So if you own a home, you have property taxes, you're going to get taxed on that. We get taxed on death and estate tax. So you're even getting taxed when you die. Okay. And there's strategies to help you with that. Now, if we're taxed up to these things almost 51%, what does that lead? This is the biggest expense that we have. That means 49 cents is our profit and 51 cents is to taxes. Now this 49, what else are we going to do with it? So this is why having a business in this time is very beneficial for us, because one of the things that it does is one thing is the IRS gives us incentives, right? As business owners. Why are they giving us incentives? Well, one of the things is that we are creating stimulation in the economy. We're allowing the economy to be stimulated, right? We're keeping the money circulating. How are we doing this? We are hiring. We are selling, right? We are getting income. We are providing jobs to people. One less thing that the state and the government has to worry about. The second thing is when we start to look at real estate. Real estate, we get another incentive. Why? Because we're creating housing. We're creating housing opportunities, and that is one less thing that the government has to worry about. Now, it's very beneficial because when we start to leverage and have these transactions, the government says we are going to give you incentives and bonuses and credits and deductions in order to do these things in this area. So in housing, I have the option to have a big tax break, which is one of the biggest advanced strategies you can use because it creates wealth. It's an asset for you. You get equity and you get to do so many things. It's a tax benefit as well. And you create generational wealth with this and legacy with this. And so it's an all in one, right? And when you use this kind of strategy or this opportunity to get this as an incentive, because now I'm making hundreds of thousands of dollars, millions, hopefully. And as you're making these millions of dollars, the IRS is going, okay, you can use this. And now you can deduct this from your taxes, this from your taxes. And this is how the wealthy stay efficient with the tax strategies, with investments and real estate. And so that is one of the things that we will get into. Let me know too if y'all want to hear more about that, because this is a strategy that's amazing to use, but use what the IRS gives you, right? Because the thing is, people are scared and afraid, but there's a whole book in saying, hey, this is what you can do. So imagine you're not doing that, and then you're missing out on the tax breaks that they actually do give you so that you can keep more money in your pocket and leverage that to build more wealth and create more legacy and generational wealth and stability and all these other things that you can be doing. So I think that it's important for you to think about. And also, if you're making money and you feel like this money is going to taxes, listen, you don't need to work harder. You need to start worrying about how can I get a tax strategy first. That is your low-hanging fruit. That's the most important thing that you want to start studying or finding to get help or finding help with so that you can leverage what you should be leveraging. And so if that is something that you guys want to hear more about, let me know. Drop it in the comments. I'll probably be talking about it anyways. I want to hear your thoughts about it. And I thought this is a really good topic for us to cover in the first few episodes. Y'all know I'm all about strategy. I'm all about wealth and I'm all about legacy. And so as we're going through that, I'm going to be talking to y'all about the flourish method that I have also, because that's important to leverage while you're doing these things as well. So if this was a great topic for you, please let me know. I'm so excited to hear what y'all have to say. And if y'all are using some strategies, what are y'all doing? What are you doing to leverage what you have? And until next time, at Evolving Out Loud, we will see you next time. Peace. Exciting to say the least, and I'm happy that I'm doing it with you guys. Until next time, I love y'all, and welcome to Evolving Out Loud.